Welcome to This Explainer. Today, we're taking a rapid, data-driven tour across the globe to map out the highly volatile polymer pricing landscape for August 2026. Look, if you're managing procurement, you already know that keeping a pulse on these international bazaars isn't just helpful, it's literally essential for survival. We're going to break down the exact numbers, the regional pressures, and most importantly, the actionable buying strategies you need to be implementing right now.
Because in today's commodity markets, hesitation costs serious money. We're seeing incredibly rapid shifts in supply, demand, and geopolitical influences. The reality is, when polymer markets get this volatile, you need actionable intelligence instantly. You simply can't wait for a weekly digest to make a daily purchasing decision. You need the data in under 5 seconds to stay ahead of the curve.
And for that kind of lightning-fast speed, you've got the Polymer Bazaar WhatsApp chatbot. It's super simple. By just texting HDPE to +91 93746 24365, you get 24/7 access to instant price lists, market predictions, and revisions sent right to your phone. Honestly, it's the ultimate solution for cutting through the noise and getting straight to the data you actually need.
All right, let's dive into this global picture by looking at the primary macro contrast defining August 2026. We are witnessing a massive divergence in market forces right now. On one side of the Atlantic, over in the US, we've got strong export demand pushing numbers up, even though domestic demand is feeling pretty sluggish. But on the flip side, in Europe, weak demand is running headfirst into rising feedstock costs. And these conflicting forces, they are rippling through the entire global supply chain.
First up, let's look at the US bazaar and this export boom. Like I mentioned, domestically, US buyers are keeping quiet. But international demand, mixed with some ongoing geopolitical confusion, is aggressively driving those FAS Houston prices upward. I mean, we're seeing sheer magnitude here. HDPE blow molding just jumped $45 to $1,045 per metric ton. But LLDPE, that is where the export strength is really flexing. Hexene took a massive $65 leap to $1,070, and that's driven almost entirely by buyers outside US borders. Plus, we're seeing a solid $35 bump for LDPE, bringing it up to $1,210.
Now let's cross the Atlantic to the Europe bazaar and check out the feedstock crunch.
The atmosphere in Europe is entirely different right now. It's kind of a damp market. Buyers are really hesitant, but producers are having their hands forced. Ethylene contract prices just rose by €40 per metric ton. That is a heavy production cost increase, but trading is so weak that producers simply can't pass it on to the buyers. Because of this, prices on an FD/NWE basis are stubbornly flat. HDPE blow molding, LLDPE C6, and LDPE entirely unchanged. We're only seeing slight cracks where costs absolutely had to be absorbed, like a €20 bump for HDPE injection molding to €1,090. It is a classic standoff between rising costs and weak demand.
Moving east, let's look at the Turkey bazaar and its logistical bottlenecks.
In Turkey, the narrative isn't really about base demand right now, it's almost entirely about the physical movement of goods. Logistical constraints combined with highly uncertain feedstock prices are fueling universal CFR price hikes. HDPE is up across the board by $10 to $20, but the real pressure point you need to watch is LDPE. We are seeing a steep $45 per metric ton increase, bringing it to $1,240. It just goes to show, when logistics get constrained, those premiums jump fast.
Next up, the China bazaar, where we're seeing plant shutdowns and tight supply.
China has been hit with some significant plant shutdowns recently. And even with the slight uptick in factory operating rates, processors are playing it incredibly safe, strictly adhering to need-based procurement. This dynamic has created a massive premium for LDPE. Just look at the spread here. While high density and linear low density sit around 8,250 to 8,500 RMB, LDPE spot prices have skyrocketed to 10,500 RMB. That price gap vividly demonstrates just how tight LD supply truly is in the Chinese market right now.
Zooming in, let's focus on the Indian bazaar.
Bringing all this global context closer to home, there are 3 highly localized data updates you need for your immediate calculations in India. First, overseas LLDPE film offers for August 2026 cargoes are sitting near $1,255 per metric ton on a CIF basis. Second, Indian Customs just revised the USD-INR exchange rate downward by 1.15 rupees, putting it at 96.05 and 94.30. And third, which is super interesting despite all the global volatility we just mapped out, domestic PE producers in India have completely frozen their existing prices across all HD, LL, and LD grades for this week. Absolutely no changes domestically.
So what does this all mean for procurement strategy and the buying pulse?
How do we actually translate all these global numbers into an actionable strategy? What's the real buying pulse on the ground? Well, the crucial takeaway here is that open market premiums are eroding, and that's forcing a sharp transition firmly into a buyer's market. Processors have completely suspended speculative buying in favor of a strictly hand-to-mouth procurement strategy. There is simply no reason to hoard inventory when those open market premiums are vanishing.
However, just because we're in a buyer's market doesn't mean there aren't traps you need to watch out for. There are very specific, acute shortages happening right now in HD film and LD lamination grades. Because of these shortages, traders are finding leverage and are actively demanding premiums on these specific materials. And what's wild is this is happening despite the fact that there has been absolutely no improvement in the sales of finished products downstream.
Which brings us to our final definitive purchase opinion based on all this data. Your strategy right now needs to be twofold. First, secure the grades with short availability immediately, specifically those HD film and LD lamination grades we just talked about. Do this before local producers decide to hike their ex-works prices to match the traders. Second, for absolutely everything else, keep your wallet closed unless you need it today. Stick strictly to need-based purchases for all other grades for the time being.
So, as you review your purchasing plans this week, ask yourself, is your inventory ready to absorb an impending ex-works price hike on HD film and LD lamination? Because the data strongly suggests that hike is coming. Audit your inventory strategy today. Take action on those short grades and stay disciplined on the rest. Thanks for joining this explainer, and we'll see you next time.